Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, July 3rd. Well, U.S. equities closed mixed on Wall Street yesterday in New York's final trading session of the week. As you know, U.S. markets are closed today for our Independence Day holiday. So before we go on, please know that all of us at ToniTurner.com wish you and your loved ones a wonderful 4th of July. And now, on to the market. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. And some new traders say, why do we care where the S&P 500 goes? Because it's our benchmark index, and in bull markets, we can say that 3 out of 5 stocks will follow the S&P 500 higher. And in bear markets, we can say that 4 out of 5 stocks will follow the S&P 500 lower. So that's why we care where the SPY is and what it's doing. So as we look at this daily chart of the SPY, we can see right here that it closed yesterday, or closed this week, I should say, at $744.78. You can see that it's just sitting right on top of the 20-day moving average. It's still below the new all-time high for the SPY was on June 2nd, and it came in at 700 right up here at $760. Now, the SPY is currently sitting atop its 20-day moving average, the red line, and that's coming in at 741, as you can see here. The 50-day moving average, a very important moving average, the green line, is coming in at $737 and change. And down here we have the 200-day moving average coming in here at $692. Now, we can't see it on this screen, but we do know that the SPY climbed in a really strong uptrend from April 2025, over a year ago. The lows back then were at 481, and it's just kind of important to know that it was an incredible uptrend that led up to the consolidation you can see here on your screen on the left side. So it climbed from April 2025 lows, from that low at 481 until it touched the high here in January of this year at 697. So while we say this just looks like a very innocent consolidation, what it really is at the time is what we thought it was. We thought it was going to start to be the top of what was really an incredible climb up. So then it traded, after it did get up to these highs here at the time, this was the all-time high at 697 in February, and it was chugging along here. Then on the news of the Iranian war, the war with Iran, it headed down, and it headed down to 629 in March. That was the March lows. Then it turned around and rebounded like in a very, very, very steep uptrend that you don't see that often. And it ran up here in April and May up to this new all-time high at 760. It's like, wow, nothing goes straight up forever, and that was quite a run on top of the run that it had before. But at any rate, it climbed up here to on June 2nd to the new high at 760, then dropped to 723, down to the 50-day moving average in June, then rallied up to 757 here, then dropped down to 726, then stepped up to where we are now at 744. So we can look at this and say, oh boy, what do we do with it? And what I'm going to do with it here is I'm going to draw a couple of trend lines here and here. And what do we have here? We have a triangle. Now, what we know about triangles when it's lower, higher lows and lower highs turning into this triangle formation, what we know about triangles is that when they decide to move dramatically, they move either up very, very strongly. They either break up to the outside or fall hard, hopefully not to the downside. And so that is what we were looking at here now. If it's going to be bullish, I usually like the triangle to break out to the upside when it's about 2/3 of the way through. But this triangle isn't listening, so we're going to have to wait and see here. But I'm going to be very cautious adding new positions when we have this particular pattern doing what it's doing. For support and resistance levels here that will help us gauge it a little bit, we do have right up here, we have resistance up here at this pivot at 757, and then up, of course, to the highs at 760. We have potential support here. The green line, the 50-day moving average, is coming in again at 737. We have pivots here at 723 and 727. We do have a little consolidation down here at 710, 713, might do something. We've got the prior highs coming in at 697, so that could potentially offer support, and the moving average, the 200-day, at the moment anyway, it's coming in at 692. So in the coming week, to stay reasonably bullish, we want the SPY to hold the support level at 723 right here. We want the SPY, I know it's below the 50-day, but that may happen, but I want the SPY to hold and stay above this 723 line here. If it looks like it's going to head lower than that, and maybe even a little before, if it heads down, I'll probably start taking profits on short-term trades that look like they could follow the SPY lower if that happens, but we'll wait and see. Maybe not. We have these levels to consider, and I think that they'll be a big help. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100, which is made up of the top 100 non-financial stocks in the NASDAQ stock market. And of course, they include the big guys like the Mag 7 group, all the big tech stocks. Now, if we look over here, we can see that the Qs closed this week at $712.60. It's the bottom of this red candle here. It is still below, of course, the new all-time high that was touched on June 3rd. Right here, the new all-time high is up here at June 3rd at $748. Now, if we look at the candle here, we can see that the Qs are back down below the red line, the 20-day moving average. The 20 days coming in at 721 and change. The Qs are sitting atop the green line, the 50-day moving average, which is coming in at 709. And thankfully, above the 200-day moving average, which is way down here at 634. Now, the Qs also had an April low of 2025, just like the SPY did. Everybody had those April lows. And the lows were the Qs were at 402 back then. Then the Qs rallied in a really strong uptrend. Actually, a lot of it looks similar to the one we see here this year. This uptrend here, which was, I mean, beyond spectacular. Anyway, we had one similar to that from the April lows in 2025. The lows back then were 402, rallied in a really strong uptrend, then started consolidating where you see it on this chart, and it came up to a high here, the January high at 637. So from those lows at 402 up here to 637, that was a 58% rally. So we're thinking, as we're looking at this, and if you could see the longer term chart, you'd understand, we're thinking that this may be the highs for that particular big move up. But as we know, as we go further, there wasn't. From there, it dropped down right here in February. It dropped down through the 50-day and 20-day moving average down here to 594. Tried to get back up through these moving averages. Look how strong they are when they support. Moving averages are strong when they're acting as support, and also strong when they're acting as resistance, as you can see. The Qs could not get, to save their soul, they couldn't get back up over this 50-day moving average as they went into March. Then, of course, in March, we learned of the war with Iran, and the Qs dropped down here to 555. Then it rebounded and then just flew, much like the SPY, but even steeper in this incredible uptrend in April and May, and it came up here to 748. Then fell down here to 693, then rallied to the June up here to 744, June 15 high at 744, then fell back down to the 50-day moving average. Look how nicely, in this case, the 50-day acted as support, and it can do that. Struggled up to 737, and then dropped to where we are now, down here at 712. So now let's draw some trend lines. See what we have going on here, because we do kind of sort of, we can do this, we can do this. At any rate, we got another triangle going here. And also look at the candles here. Look at the difference in the candles here. Big green candles and more big red candles. Red candles, of course, meaning that the Qs closed at the lows of the day or toward the lows of the day, lower than where they opened. So the red candles are the bulls, the green candles are, the red candles are the bears, the green candles are the bullish ones, and we can see that it's hopping around now all over the place. The bulls and the bears are duking it out up here above the 50-day moving average. They're really arguing. So what are we going to do? We go into this next new week, we see that the resistance could be at the 20-day. We could have some resistance at the 20-day at 721. Then there's highs at 724 right here, and then on up to the highs at 748. We have potential support here at the 50-day moving average. The green line's coming in at 709. Then down to this pivot here at 703, then down to 693. Right there, we've got consolidation here at 660. I don't know, that could potentially be support. Then we've got the prior highs down here at 637, similar to the chart we looked at with the SPY, and of course we've got the 200 days coming in here at 634. So that could help. So we need to be careful here. Again, we have this triangle formation. It's going to break out one way or the other. It's just the way it works. So fingers crossed the Qs go back up and go over the highs, but a lot of the tech stocks are extremely overvalued and making a lot of investors nervous, of course. We will have an earnings season coming up here again soon. That ought to be wild. So we do need to be careful here. If the Qs fall below 793, that to me is going to be a bearish move. So, I mean, it will present us with opportunities in the future, so that's a good thing. But we do need to be careful here and keep an eye on the Qs in the coming week. Our final chart today is one we haven't looked at in a pretty long time, but considering everything that's going on, I want to go into something that looks a little different. As you can see, this chart is not following the SPY and certainly not the Q. This is the Global X E-commerce ETF, symbol EBIZ. It has 40 holdings. Some of the top holdings in it are eBay, Amazon, Etsy, Williams-Sonoma, and JD.com. I like this setup. And the retailers are starting to gain a little energy here, which is a good thing. And certainly, with all of the money, or a lot of the money going into AI stocks and tech stocks in the last few months, e-commerce has gotten pretty well ignored, and you know, some of the stocks fell lower, but it's looking like it could pick up here. So anyway, this is something I'm going to look at. Now I don't know if you can see this candle. It's nothing more than like a little tiny line, if you can see it, because volume was low yesterday on this ETF. So all we have here is a little tiny red candle, and it closed at $28.38. Now, that was yesterday's move on this. It's usually, of course, a little more dramatic, and we can see more and more action coming into these recent candles, say in May and June and so forth. So the eBiz, we'll have to say, it closed yesterday at $28.38. It's above the 20-day, the red line, which is coming in at 27.47. which that is below the 50-day because price came down here, and the moving averages get inverted when that happens. So the 20 days below the 50-day, but not too much, so it's not a real big deal here. And the 50 days coming in at 27.78, so just a few cents between them. It is, yes, below the 200-day moving average, which is coming in at $30 and change. So if we look left on this chart, we'll see that the eBiz made a recent high in January, right up here in January of this year at 34. And then it rolled down and it started falling. And it fell all the way down here to a March low down here at 26. And then all of a sudden, everybody goes, all right, this is too oversold. And if you look at the RSI down here, the 14-day RSI, it was definitely below the 30 line here. And the bears were on it. Boy, they took it down hard. So again, we came down here to a March low of 26. Then it rallied steeply to 29 plus up here at this pivot up here. Then gradually drifted down again to the 20 and 50-day moving averages, and then kind of walked along the 20 and the 50 days right around $27, and walked along the 20 and then got down below the 50-day moving average, then perked up in the last couple of days back up here to our little tiny candle at $28. So what we have here, I think, it looks like it's going to break out, is what I'm trying to say. So it looks like we do have, these are higher lows than this low, so that's a good thing. So the bulls came in here before, excuse my pointing here, the bulls came in here and didn't let it go all the way back down here to the 25, 26 where it was. So I like this pattern, and it is out of the way of more or less out of the way of the technology trade. I'm gonna, I'm kind of watching that go, but this is a little different. So in the coming week, if the market behaves reasonably well and the eBiz stays above its 50-day moving average, again, that's coming in at 27.78, but I want it to stay above that. I will buy a position of the eBiz in my trading portfolio with my initial stop below the 50 and the 20-day moving averages. I'm putting it down here at 27.25. That's pretty tight. If and when the eBiz climbs above 30, that it would have to get back up here. If it can climb above 30, okay, if it can move up and gradually climb above 30, I will add to my position, and my stop will be a trailing stop by then, of course. And you can add to it before that if you want. You could add if it goes over 29. But anyway, if it starts moving up right in here, again, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the EBIZ in the coming week. Now, I always tell you the top 4 or 5 holdings in these ETFs for a reason, because, and this time I'm looking at I looked at the eBay chart and it looked kind of intriguing. So depending on what the market does, you may want to take a look at eBay. While we're at it, we've been talking about the IHI medical devices ETF as a bottom fishing play, and we've been looking at it and watching it. Looks like it could be breaking out here, so I just wanted to tell you guys that. I also have told you over the last few weeks I've been nibbling on Robinhood. Hood is the symbol, H-O-O-D. That's definitely moving up, and it's an exciting ride. I'm raising my stop on that one on my short-term trade. And I'm also keeping my eye on a stock I've always liked most of the time, Teva Pharmaceuticals, T-E-V, that's a T, T-E-V-A. So you may want to look at it and see what you think. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to bottom fish like a pro, right down here. How to bottom fish like a pro is the perfect training to check out right now. In it, I show you exactly how to detect with high probability how a stock or ETF is just about to wake up from an extended downtrend and finally take off again. That could almost apply here to our eBiz trade. Our new low price for this program is only $199. You should make that back pretty quickly. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading, how to swing trade successfully, very popular, how to trade the trend to profits, one of my favorites, how to read charts, great for novices or brushing up, 3 winning setups, these are both just $59 each, how to bottom fish like a pro, find out how my online programs can help you earn more money quickly and easily, and once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, happy Independence Day. Happy birthday, America. Keep green on your screen. I'm Toni Turner, and this is The Market Now.